Okay, good evening, everyone. Welcome to our class number 15, the last one in this series, going through the basics of QuickBooks. The last email that just came out 20 minutes ago. So I mentioned we're going to do two things tonight. First of all, we're going to introduce another two reports. One is called the adjusted trial balance, and one is called the statement of cash flows, which I will explain. In addition, I'm going to show you the stopwatch that's in QuickBooks. That's what we use when we want to time ourselves on a job. So similar to what we do with Pinchas Tadris, when he has a timesheet, he's doing multiple units and he fills out throughout the week. But if you're only doing one time a job, you're not filling out a timesheet, you're doing one activity. Or the same thing if Pinchas Tadris wanted to time himself each time he did a job. So he starts the unit. There's a feature called stopwatch. So he'll keep track of the time he spent doing a job. And that will become his unit for the day. So let's start with the QuickBooks file here. Let's share this screen. Okay. Okay. So we have here by the employee section, if you recall how we did a timesheet, now it's much fuller, the menu. We have payroll schedules, which we already set. We also have employee forms. We have employee payroll taxes and liabilities. This is beyond the scope of this course. It's just the idea. Just by taking the QuickBooks course, you're not going to be actually doing all the forms for payroll. But we had here by enter time, we had not activate T-sheets. Activate T-sheets is what QuickBooks is offering you as paid service. Then there's a weekly timesheet. This is what we did with Pinchas Tadris. Then there's a thing called time and enter single activity. So again, it's in the employee menu under enter time and enter a single activity. And when we go into that, we see over here a stopwatch. And you could mark down and associate this with a customer. To begin with, instead of doing a timesheet and we'll do multiple customers, we'll pick over here, you know, if there's, this is actually under vendors and employees, what's this time about? And you could do a stopwatch. Click a stop and it'll start timing you. These are the seconds, these are minutes, it takes you an hour, it'll fill up. And when you have then you go to do a task and you're working a web design. And then when you stop, you have the payroll item. And we had PRH, for example. So PRH would be a unit paid by the hour, or you have web design hourly. Both of those could work. And you would associate this in the drop-down menu also with the WD. So just like you have the WD hourly, which that is the payroll cost, $40, you would associate that with the service item WD. The same way you would do it on a timesheet for multiple units, you would have the customer Ploni Almoni. You see we have your drop-down customers, right? You'll have the customer, we'll pick any one of the customers. And you would have the service item. This will help us get his invoice. Let's do for right now, for example, Mr. Fiver's Glick. He's lucky today. We're going to do, assuming we start, we're going to override. Let's say we assume it's 45 minutes. So it was, let's make this 0. 45 minutes. So we have a service item for Fiver's Glick that we're selling, probably billed at $75 an hour. We have a WD hourly, which is what we're going to cost us the $40 an hour for web design. And this is today's date. This is the feature that it's today's date every time we do a new transaction. And I save and close. Let's see if we go back to the income tracker, if it's going to show up. Activities must have a name. Let's see over here, activities. Let's take the employee, in this case, Pinchas Tadris. Okay, so we have Pinchas Tadris, he's the employee doing the job. Because alternatively, you could have had a vendor, not one of your employees. Again, if you subcontract it to a third party, not one of your employees, it will be a vendor. So if Pinchas Tadris is doing 5-ish glick, let's save this now and see what happens. Okay, that closed, so it saved the transaction. If we go to Income Tracker, we were familiar already with Income Tracker. We have here 5-ish glick, $56.25. This is 3/4 of an hour. And then we know it's billable, choose billable, and that's for the 75, the 40, 3/4 of $75, that's a $56.25. So now we have an additional feature of how to create a time and expense, not necessarily by doing a whole timesheet to fill up a whole week, 5 different units, but only, just by doing one activity, you're putting in a stopwatch. You could put, again, when I put the colon before the minutes, that means the number 45 is minutes. If there will be no colon there, then it would have been 45 hours, and that would have been a nice big chunk of income for We Do It All. If anyone wants to follow and do this activity, I will wait a moment or two. And now you'll see we have here already unpaid bills for a while, and because these are already invoices that are created, and the time and expenses is still $56.25. And this is, you know, instead of building up, waiting for a whole week to gather up, and if you don't remember every single day exactly how much time you had, you know, you might decide to have an open timesheet and every day add 1 unit, or get it over with. Put in your single activity. It'll say 5-ish glick for 45 minutes, and then for tomorrow it'll be someone else, and and so on and so forth. Okay, so that is pretty much one of the new items we're learning today. And the reason why I'm introducing this is because I got a preview of one of the sample quizzes, and they do ask you a similar question about time, a single activity, how you track it. So again, the week we track with a timesheet, or multiple activities. It could have been also on one day, and you're keeping track of multiple clients, multiple activities on one day, or on multiple days with multiple activities. But if it's only one customer, one activity, we do the stopwatch. You could actually manually do it with the QuickBooks stopwatch, or we can just write in the amount of time directly to a customer. Okay, the next thing on today's menu, which I'm going to give introduction to, is the adjusted trial balance. So first of all, before we know the adjusted trial balance, we need to know what is the trial balance in itself. So if you remember back in the first class, we were discussing how everything used to be a manual system, and everything was further entered, like you had a journal with all the activities of the day, and then we had to sift out different material relating to different, we transfer different ledgers. So if we have, you know, cash sales happening during the day, so we would go through the journal and post it to the cash ledger, so we know how many cash sales were made that day. Could be some customers walked in during the day and made a payment towards account, and you were too busy to go and open up every single ledger and find the customer and write it down to his balance. So you write it down in your trusty notebook, otherwise known as a journal. This is, we gave the name in the first class, the original book of entry. That's where everything first gets documented, right? Then we have, we received merchandise. So we write it down in the journal, and then we post it over to the various journals. If you took it on credit, then you have to put it on your accounts payable journal. And then you would have, you know, one journal be a purchases journal, the cost of goods. Another journal will be the corresponding credit, which will be the liability journal. If you paid for it, then you would have to have, you know, the credit to cash. So that will be a credit. And you have purchase journal, same thing with expenses. You paid Con Edison, so you have an expense journal. So again, in the journal, you'll write down you write a check to Con Edison. But then you have to go to your expense journal and transfer it over, expense ledger rather, and transfer it over. QuickBooks does it all for you. Now, In the manual system, as we know, all debits have to have a matching credit. So you would make what's called a trial balance, which is you would add up all your debits and all your credits in two columns and see if they match. If you were off, then you know you had an issue even before you got to the next step. Even before you started to prepare your income statement, you would know you have to find out where's the error. The debits don't match the credits. That cannot be. There's always a matching. It might be in the same side of the equation. That means you could have a shift of assets. You could have converted cash dollars from the bank. You went to the bank, you made a withdrawal, you got coins for your cash register to the store. You still have cash. It's just a different format. You might have undeposited funds. You might have bought furniture. It's still an asset, but you would still have to have debits matching the credits. So that would be the first trial balance, taking all the debits and credits, making sure they equal the same amount. I'm going to open up just to show you now that window, which is the adjusted trial balance. So you see here, you could have printed this out, or you could watch it on the screen, and you'll see that the unadjusted balance is all the debits and all the credits summing up to $7,078. The adjusted trial balance, that's the adjustments in the middle, right? Before we get the adjusted balance, is all those adjustments that are necessary to make. So you see here, what are the adjustments? We adjusted supplies. A prepaid rent, we debited, this is as of 5/31, we debited prepaid rent. That is the asset of prepaid rent. And you could go further down, you would find in matching, here we have, if I show you one over here, here's the prepaid rent. We credited the rent expense. It's not expense anymore. We undid the expense as of 5/31. Of course, we made a reversing entry for 6/1 to pick it up again. But when we make the end of period reports, we have to do these adjustments. And this is where you would scan everything, all your accounts that are active, to double check if we adjusted everything that needs to be adjusted. Here we had supplies. In this case, this supplies is asset, $71 we had left over. And we go down to office supplies over here, expense, 71 credit, we undid that expense. So if you just follow down, we start with assets. That's the permanent accounts, right? Chase, accounts receivable. The inventory is a permanent account. Prepaid rent is an asset. Supplies an asset. Undeposited funds is zero. Depreciation is permanent. Furniture is permanent. These are the assets. Then we go over to account payables, right? So whatever that, take this also as a review. Assets go up on the debit side. That's why it's a positive number, right? Now the liabilities and owner's equity go up on the credit side. So we have accounts payable goes up, which is we have to pay the vendors. We have this credit cards liability. Now we go over to equity. Actually, no, there's also liability. Shimon lent us $1,200 to pay off a copier. Members' equity was first $320. We had $560. We have revenue. I told you revenue brings up your equity because that's basically what it does. The end of the year, we take all of the income. There was sales, which was merchandise. We had sales, which was services. Is our equity. This is where we finish the equation. And then we go to the revenue accounts. We have the cost of goods, which are the expense. We have advertising as an expense. Now we have depreciation expense, right? This is an adjustment we did to pick up an expense of depreciation because 5 months, right? You see the report is through May 31st. And if over the year we take $240 or $20 a month, we pick up in 5 months $100. Of course, we made a reversing entry for June 1st, which basically sets it back to zero. Because if you look on June 1st itself, you'll have a negative. But if you make the report a negative 100, but if you make the report from May through the end of June, it will be a zero, because we needed to net out in order not to have at the end of the year the problem of collecting $340 depreciation, the $240 for the year plus the 100 for 5 months. It's double counting. That's why we do the reversing entry. And then we have payroll liabilities, which we picked up, is to recognize the expense, right? We owe it. We didn't pay it yet. If we paid it, well, we did pay payroll expenses. It was actually nothing in May. All our checks were in June, but we wanted to recognize an adjustment to recognize $800 for the month of May, which we again obviously reversed on June 1st. So when this could be the book, obviously the accountant will review this, but the bookkeeper should make an attempt to flag the accounts that need to be adjusted, right? We don't adjust the bank. Whatever cash is there is there. Account receivable, it's still account receivable unless it was paid up, which would automatically adjust itself. There actually is an adjustment sometimes made to recognize the fact that not always you get all of your receivables. It's called an allowance for doubtful accounts. You know, to recognize that we won't make all the sales that we do. Hopefully it won't be too much, but that's again beyond the scope of this course. And we go down. We look basically from the expenses. This is with the theory that all our expenses are written first as expense. So rent expense, we took $1,500. We have to go and make an adjustment for $1,000. You might have done the other way around. That's making your prepaid rent originally in the beginning at $1,500 of prepaid rent, and now I will undo. I would credit my asset $1,000 and recognize $1,000 expense. These are two acceptable methods of accounting: to take your expenses and expense them right away and adjust it to an asset, or to make an asset out of your prepaid expenses and after a period recognize what was used up. But you got to be consistent with what you do. Okay, so now when we make the adjustments, for example, we have let's take an account like rent expense. If rent expense is $1,500 and we made an adjustment for $1,000, the adjusted balance now would be $500. If we had $221 of office supply expense, we made an adjustment to $71, the adjusted balance will be $150. So now, hopefully, we have a little bit of understanding of adjusted trial balance. Now, obviously, we're not going to have the issue of the debits and credits matching because QuickBooks won't let us make an error. If we make an invoice, automatically both ends of the equation are done. And even if we did journal entries, QuickBooks will tell us it's not in balance and it won't let us save the journal entry. So you won't have the issue of balancing, right? Made 7078, when you make adjustments of 1971, total debits and credits, and then the adjusted balance of 7979. That you won't have, but you will need to look at the adjustments to make sure we took out whatever needs to be adjusted. And then again, this is something which may or not be brought in the certification course, questions to be aware of what's the adjusted trial balance. So they will ask you what type of accounts need to show up in the adjusted trial balance, and you should be familiar with at least some of them. Okay, now we will go over to I'll take a pause over here. So that we didn't really do, I did really just a demonstration of a stopwatch, but I'm just explaining the two reports I sent you. It's on the screen, it's in your email. So there's nothing for you to enter. I will just take a look quickly. I see a question and answer. Okay. Statement of cash flows. That's also a very important type of statement. It's not the balance sheet. And you want to know where do you get these reports. So I will show you. You have a report drop down. Let's see if it shows up. Report drop down. There are two sections which we did not touch. More than one section, but in the company financial, we did section 1, which is profit and loss. And then so many types of ways you can look at it. You look at the balance sheet, and then there's statement of cash flows. So this is a report not telling us what our profit and loss is, not telling us what the value of the business is, but just to see where did all the money come and go in the business. There was a lot of money coming in, going out, and what do we keep track to see, what doesn't add up, to see if there's something, if there's missing funds, and we're scratching our head, where did this money go, or where did that expense come from? That is a statement of cash flows. I believe there are some companies, maybe publicly traded companies, that are required to have, when they have their financial statement disclosures, they also need a statement of cash flows. But this is helpful for many private businesses. So let's see the statement of cash flows, which I prepared, and you have it here on your screen. Okay, so maybe I can actually probably do this side by side with the balance sheet. So our net income so far, this is not through May, right? What I did before, the adjusted trial balance and the trial balance, that was specifically through May, because that's the only time the adjustments will show up, because as of June 1st, they get reset and it's a negative, and on June 2nd, it nets out to zero. So I had to do that May 31st, but I want to show for the whole year, what is, assuming that everything stays the same, nothing else happens. So we're picking up different payrolls that we did for June 20th, not only 19th, but also June 26th. We did maybe even July 3rd, I don't recall what we did last time. But on my screen, you'll see a net income of 9,176. That's the operating activities. For everything we did during the year. So there's three sections you'll see in gray. First of all, to point out, there's operating, investing, and financing. So what is operating? Our regular course of business, which is our sales, whether it's merchandise, whether it's services. We are running a net income negative of 9,176. I will pause for a second and reference that to our P&L. That's where you get your net income, which also carries over to your balance sheet. So also the report, profit and loss for the year. Remember, you put the Y in the first box and the R in the second box, and you look at the bottom and you see here 9,246. What do we have here? We actually have 9,176. Okay, the answer is because it wasn't for the year. Everyone remember, we have a $70 income of 2019 from 5 years ago, right? So let me put again an extra Y in the first box. It's going to backdate us a year. And now we will see our net income. Whoa. Okay, it is 9,176. Wow, isn't beautiful? Our P&L matches our first line of the statement of cash flows. If you notice, the statement of cash flows set our P&L is January 2019 through December 20th, 2020. Our statement of cash flows specifically says all transactions that I picked through here from all. Now, if I wanted to check my cash flow only from this year, I'll put Y for the beginning of this year, R for the end of this year, and it will be 9,246, which was the original number we got on our P&L. So whenever you think there's a discrepancy between your statement of cash flows, and here now it says January through December, it doesn't say all transactions. So you have to make sure, and this is a question which came recurring several times in class, and you have to make sure your report dates line up. Your balance sheet is a snapshot of one day. Which period is the company valued at? Is it the day of December 31st? Is it June 30th? Is it May 31st? But the statement of cash flows, if you're taking all transactions, right? If we will do all the transactions, which will bring us to 9,176, then we have to make sure that we match up to our P&L. It is also all transactions, and you will have 9,176. If you want P&L to be only Y and R, which is this year, 9,246, then make sure your statement of cash flows is also matching Y and R, the 9,246. Okay, now whatever we did, a year later is not going to change the cash at the end of the period, which is the last line, because the bottom line is the bottom line. At the end of today, or the end of this year, our cash at the end of the period is negative 1449.31. I will take a pause over here before I go to the Q&A and go to my bank. do Control R, and you will just reference. You'll see that my bank is actually negative. Where is this here? Shows the ending balance is negative 2449, which is would be incorrect in a second. I handed it this morning. Oh, yeah, you see it's 2449.31. We're off by $1,000. It says 1449.31. Don't get scared, right? The cash at the end of the period, recall, cash includes undeposited funds. Remember that $1,000 we got from Ploni Almoni? Make deposits. And we have our $1,000 sitting right here. When we will put the $1,000 in the bank, then our negative, I'm not putting it in now, or I could put it in now, regardless, we would come up from a negative 1449 to negative 2449 to a negative 1449. So even though our register registers at 2449, the statement of cash flows tells us we do have the cash of 1449, and we got to go find it. Okay, so cash at end of period, and this is not clickable, right? The last line. So if you ever see that, doesn't matter. Again, we know the net income, the top line will match our profit and loss for the year. If it's the number, if the P&L net income is not matching the net income from operating activities, make sure that the periods are the same. Same with cash at the end of the period. If it's not matching up, make sure first of all you're the right period, and check other sources besides the bank. Maybe you have multiple banks. Maybe you have 2 bank accounts, so you have to add up the difference of both registers plus undeposited funds, which we have, because cash includes all the money which we have cash. Okay. What else happened in this year? Let me take a look quickly at the Q&A for anything on this. Okay, so the questions regarding the test we'll deal after the test. You can see reporters side by side if you don't have so many windows open. Let me close out a bunch of windows. Right. Okay, cancel. So now my statement of cash flows. Let's see, let's close a few more windows. I keeps multiple copies of the same window. So now I'm gonna create, let's say, a report of P&L, and so again for years it's Y&R, and I'm gonna have a report for statement of cash flows, and again that also be for Y&R, and the general way of arranging the windows or arranging the icon tile vertically will be side by side. Vertical is side by side, and you can see your statement of cash flows on the side to side of profit and loss. You could also bring in your balance sheet, and I'll do here a second. Balance sheet standard, and as of R, because it's the end of the year. And now I'm going to put tile vertically. Now you have 3 reports. Okay, we have our balance sheet, our statement of cash flows, and a profit and loss. If you're going to put in more than 3 reports, it's going to get small and you won't be able to see so good. So when you go tile horizontally, it goes across the board. And that's not going to be helpful when you have things in portrait, but sometimes you have landscape items and it's very wide across. In this case, it works best because everything does fit on one page. All the information, actually, the balance sheet does not, but we could collapse a couple of things. But if you have more windows, it would automatically put them all together. Okay, so again, how do you have multiple windows? If you want side by side, you do tile vertically. If you want one above the other, it's tile horizontally. If you just want to see like a nice spread, one overlapping the other, it will be cascade. Okay, that was a little sidetrack here. And incidentally, once I have 3, I don't have any empty space to hide the black. So let's see here. The payroll adjustment we discussed is to recognize expenses in the period that it was incurred. That that is the realization principle. The realization principle is you recognize income when you earn it, not necessarily when you receive it. You recognize expenses when you incur it, not necessarily when you receive it. That is the whole accrual basis that we're doing. If you want to do cash, then you wouldn't do those adjustments. Okay, so that answers that question. Okay, that one. Fine. Well, I'm not going to memorize this. Let's go over to, I just closed out my P&L instead of my, okay. Statement cash flows. Okay. Now, we are looking at the statement of cash flows. And again, in about 10 minutes or so, we will go with the assessment questions. After net income, which is basically our P&L, let's look at our balance sheet, right? This is accounts receivables. So if we look at accounts receivables, you see it's 94225. That's a center. That's why I lined it this way. That matches. Our inventory assets shows here $36.90. Here it shows up as a negative. Now, accounts receivable is also a negative. Why is this a negative? Usually, when you're counting your assets, account receivables increases your assets. It's a positive number, right? Our chase here was a negative number in the balance sheet because we are negative in the bank. But if we put the $1,000 undeposited funds, you see, this is where you find it. $1,000 deposited fund, undeposited, together with the 2449 gives us the total cash of 1449. But we're looking for cash flow. So even though our net income is a result of our sales on the accrual method, okay, this will take it's a little confusing to understand. The accounts receivables brought our income up, but it did not bring our cash up. So therefore, if we want to know how much cash we have, we got to deduct the receivables. We got to deduct the inventory that we have because inventory is not cash. So again, even though we look at our P&L, right? Now, I'm not going to dwell too much on it. If you don't get it so much, maybe you'll review it, it won't. But this is something that I have to show you the statement cash flows. I want to just throw you the statement. I want to spend a few minutes to understand at least the general idea of statement cash flows. So the income, right, of our sales, all our sales, 655.28, brings our net income, 92.46. That goes over to the top line of our net income. But whatever is still account receivables, whatever is inventory, that was not cash. That is a negative, right? So therefore, we have to deduct it from our cash. So we further reduce the cash we have. Now, accounts payable, right, is the reverse. It's counterintuitive, right? Usually you owe money, account payable. But even though we counted our expenses, which lowered our income, right? Just like the sales brought up our income, the expenses brought down our income. But the accounts payable didn't bring down our cash because we didn't pay it cash. So therefore, we can add back the accounts payable. So again, the accounts receivables, which is bringing up our income, is not cash. So we have to deduct it from our net income to see how much cash we have. The accounts payable, which is an expense not from cash, it lowered our net income, but it didn't lower our cash. So we add back the accounts payable, which are all these accounts, the vendors, the credit cards, and the parallel liabilities. So even though we start with a net income of negative $9,100, our cash would only be negative $6 at this point from operating activities because we deducted the receivables, which were never cash deduction, which were never a plus in cash, and we add back the payables, which are never a negative in the expense. That's the operating activities. Now, investing activities increases our cash. In which way? Well, accumulated depreciation, right? Just like depreciation expense was an expense, accumulated depreciation puts it back. The asset, the furniture and equipment, was really cash that went out. We paid for it, so we have to deduct it. This is called investing because we're buying assets. It's not an expense. The house is a negative cash because, we bought something with cash. So at this point, if we look at the investing, we went way down. We're now negative $203,000 in cash because we bought a house for $202,000. Remember, $200,000 the house, $2,000 the closing fees. So, this is like it's like an up and down. You got to hold your breath till the end. First, you start off with a net income of negative 9,100, which would imply that we had a negative cash of 9,000. But then we deduct the receivables, which were never really cash income. We add back the payables, which were never really an expense. And then we deduct, of course, the cash expenses of furniture and houses. And we put back the depreciation because that was never, depreciation was a perceived expense. We recognize that our copier goes down $240 a year. But that depreciation expense was not cash. So it did not really bring down our income by cash. We added back. And then this financing. We borrowed to the bank $180,000 cash. Members' equity, we put in $27,950. Opening balance equity, we put in, if you recall, the $60 is the original adjustment for the TLS, the different firm that we had. We remember, put in $500. That brings us to the cash at the end of the period. If we take the negative 203 and we add a positive 208, we add up all these three numbers. Negative 9 plus, actually negative 6 plus negative 208, 203 is like 209, plus 208, and you end up with a 4049. Okay, I think if you lost the calculations, it's of no consequence at this point. The main point is you see the statement of cash flows. You get an idea how we first add up the cash from operating activities. We deduct the investing activities, which are also money going out, because this is basically the P&L. Investing is more cash movement that shows up in the balance sheet. You see the balance sheet you have here, 202,000 that the house carries over. So we didn't take as an expense, but it was money out, right? The 2079 we didn't take as an expense. It's money out. The negative 240 was a negative, but it wasn't really cash. So we have to add it back. And the same thing with the equity. We take the full equity of the mortgage of 180. So it's a liability. We owe it, but it's cash that we got. Put it back. 560 is cash we received. And okay, that is it for the lecture, I believe. And now we will go over. I'm going to stop share. That is actually probably the cause of most of the black boxes when you share a screen and you open up a Q&A on top of it. And I will look at the last Q&A. Statement of cash flows would match the balance sheet a lot more if it was on a cash basis. Not necessarily, it would match more, but again, yeah, the cash basis only tells you the expenses. So only the operating activities section will be more like it. But even you have to use the balance sheet. I will get on a tangent right now. Suffice to know, it exists a statement of cash flows, and the purpose is to show us the cash flow of the year. Okay, let's go to polls. It's going to be in 3 parts, 10 questions, 10 questions, and 5 questions. Let's see here. We have, okay. I'm going to have to launch the polling. And it's going to come up. Okay. So here it says multiple choice. I'm not sure what. Later on, single choice. Probably the error. I think if you give more than one answer on the first one, it might let you do that. I'm not sure. So you could start reading the questions. These questions pretty much match some different order review questions. So we have here question number 1. QuickBooks can be navigated by using menus, icons, the homepage, all of the above. What do you think is the correct answer? I believe you can go through all through 10. You have to go one by one, or you can choose all 10 questions. I think you have to do one question at a time. That's individual. So each individual person could start responding to the first question, I believe. And we'll give 10 questions. We'll start with 10 minutes on this one. And we'll see how it goes. If you need, 13, 14 minutes. Again, this is not, you're not getting graded on this assessment. This is to give yourself an idea of, we're going to review the correct answers. It's supposed to give you an idea of what you learned over the course of the last several weeks. And this will also be a good indicator of what areas you should cover by the recertification review classes, the preparation for the certification course. Okay. Okay. So we got our first submit. We got our first person answering the question. So number 2 came in. Well, the questions. Will the review questions are sent as a style certification test that we'll be taking? Well, I believe it's a multiple choice test as well. I think it's an online test to answer that one. There are some similarities between some of the questions. I cannot comment on. You have to know basically the functions of QuickBooks, how it goes. Don't assume that you could memorize, some sample questions and be able to click through a certification course. So in general, permanent accounts show up in the balance sheet, and temporary accounts are on the profit and loss sheet, because that's what happens every year. You reset P&L to 0, And I'll stop here. I'm sure for those who didn't answer, is probably giving the answer, which I'm going to give anyway the answers during the review. So we're going to review 10 questions at a time before I go over to the next 10 questions. Okay, so Mr. Shem will keep the questions on the screen and we go over the answers. And I cannot answer specifics on how the certification test works. I didn't take the certification test myself, at least from this vendor that we're doing. But in general, computers are very smart these days. And just like they know when you're about to navigate off a web page and go to a different tab, and people who take driver ed courses, and you're on a clock, you can't just browse the internet and every now and then check in. They have ways of telling that you're moving off the screen from the test. And there have been instances, at least in colleges, where students got a failing grade because it was evident that they were cheating by going off the test page and browsing the internet or looking at some notes, etc. That is not to say that if you didn't have notes on your desk and you glance in it, that how that would get by the camera, but that I'm not here to tell you how to bypass the system. Okay, so we have about half of the respondents who put in their replies. We'll give it about another 4 or 5 minutes. And I hope you found this course informative. If it was semi-entertaining, there'll be an additional bonus. And I hope this will be able to give you skills and tools to go out and to increase your earnings. Ultimately, it's a training course. We're investing time and effort, and time is money. It's an investment that should be paying off over the long term. Mhm. Okay, we're going to give it 2 more minutes. So, question number 10. The following reports can be used to increase the collection of payments, except. So there are 4 types of reports listed here. 3 of them will help you collect your payments. 1 of them will not. Which one is that? So this is actually one of the limitations of the polling that we have is I couldn't load all 25 questions in, and that could probably give you like a half hour straight, and it won't take the time, and then we'll come back and those want to have a coffee, we'll take a coffee, and then we'll go over 25 questions. So each lunch is limited to 10 questions. So let's say, for example, in the recertification course, among other things, I'll try to sneak in a few questions different times. 10 questions wouldn't give you enough of a scope of covering QuickBooks. Okay, the clock shows 14:40. I'm going to cut it at 15 minutes. Please don't be shy. And then next round, let's see, try to get some more responses. Okay. So let's see here. I'm going to share the results, and I'm going to share the screen. I think I can do both at the same time. Let's see. Okay, I'm gonna have to close this window here. Close window, okay. Just move the screen, let's close this. So we could put the polling window here. Let's close this one. Stop share results. Okay, I'm sharing the results. So now let's go back to share screen. Okay, question number one. We had a question. QuickBooks can be navigated using menus, icons, homepage, and all the above. Happy to say, at least from all the respondents today, they all got the right answer. We know, as I always say many times, you can do various things multiple ways. And we have the menus, we have the icons, and the homepage to navigate QuickBooks. Now, data is entered into the following QuickBooks file type. And the answer is, let's see, so make sure that, let me close this thing here. Okay. The answer is, of course, the QBW. I said W could be for working. No, the B is a backup, the M is mobile, and the X is a transfer. Okay. So the answer to first question would be over here, will be D. The first question is all above. The answer to question number 12 would be QBW, which is choice number A. The following accounts are permanent with exception of the rent expense. That's in option number C, because that's the receivables don't disappear at the end of the year. The payables definitely don't disappear at the end of the year. You know, your customers might, run away, but your vendors are still going to call you, and the inventory is still there. And those are, like I said, the permanent sheets go on a balance. That's the carrying value of the company. And the temporary accounts are what closes out and gives you a net income or net loss. Chas v'shalom. So the answer to 13 is C. And question number 14, what activities and when QuickBooks window would we use to record is incorrect? So let's see, if you're recording inventory information, do you use the inventory list? The answer is no. So A is incorrect. We sell goods and we use an invoice. We order goods, we use a purchase order, and we record vendor information in the vendor's list. But the inventory information, we have an item. If you recall, we go into the items. Let's see if I could share here. And we'll share QuickBooks. If we go in the item list, and we go into each item, right, then we can do all the inventory information for sales price. So the answer was, the incorrect answer was A. That was the 14. Okay, let's go back to the questions we're going here. Which is following is not a customer transaction? The answer is receive items. It's again 15. The answer is A. You create an estimate for a customer, you create an invoice for a customer if he puts in the order, and you receive his payments. So for the customer, receiving items, that is from a vendor. Okay, which of the following is recorded when a company, you buy a copier from the Home Depot account? So we said if you get an asset, it's a debit to the asset. And corresponding, there has to be a credit, and it's an account, so it's a liability. So the answer over here is D. You record the copier with a credit, with a debit, that's the asset, and accounts payable with a credit. So 16 answer is D. and I won't go through the other ones. Which of the following is typically used to track time for single activity? I'm happy that at least 75% of the responders got that. We explained that tonight. That is the stopwatch. It said the timesheet, which is number B, 17 is B. We said the timesheet is for multiple activities or multiple customers, multiple days. Stopwatch is for 1 day. So following the class, I will give out the answers. You can always review it, but there's no fun if you have answers before. The difference between the bank balance and the book balance during bank account reconciliation, that is a timing difference. Again, so what was the question asking? We have a bank statement, that's so we can see the balance at the end. We have the book balance is QuickBooks. Now, then there obviously there's a difference, so they're not matching up. Now we're saying that it's a timing difference. So it's not an error because an error has to be corrected in one of the areas. Timing difference means just give it some time and it's going to sort itself out. So is it checks that already cleared the bank? Well, if it already cleared the bank, then the bank is not going to change and the book is not going to change. But outstanding checks is a timing difference because give it some time, and those checks are still out there somewhere. When it goes to the bank, then the bank balance should come and match the book balance. If it does not, that is not a timing difference, then there's something else. So the answer to 18 is outstanding checks is a timing difference because if it's all a question of time, the bank will meet up with the books. But if the bank has some deposits that are not in your books, then you have to update your books. If the checks already clear the bank, then there's another issue going on. Maybe you recorded something extra in your books. Okay, so 18, the answer is C, outstanding checks. 19, sales in QuickBooks can be recorded with all the following means of payments, which is, cash, check, and credit card, of course. Purchase order is not how you're recording payments and sales. That's not even how you record a payment of a purchase. It's just a purchase order, just purchase. The answer 19 is C. You don't record sales with purchase orders. Finally, the following reports can be used to increase collection of payments. So if I look at my account receivables aging report, I see who owes me money and how old. I see my collections report, who owes me money, and I see my open invoices. Accounts payable is going to give me a report of who I owe money to, not my who I'm collecting payments from. It's going to increase my payments. So the answer to 20, what is not going to help me increase my collecting payments? Account payable aging report, which is B. Okay, I hope this was understood, this part. We shall go over now to the next poll. Poll number 2, I don't look at the questions. Answer live, okay. So for the question, I put the question, obviously, I can put the share results. You want to see, you want to embarrass the class, you want to embarrass me? Let's see, I'm not, it's a learning experience. Let's start with, actually, I'm very happy on the number of these questions here. Shows that I wouldn't expect people to, to guess and get the right answer here. So people getting right. Let's see here. Let's launch polling for the assessment 2B. And we're going to give it 15 minutes this time. Okay. We have 34 possible people that can vote. Let's see the votes come in. I will turn off the video for a couple minutes, but I'm still here. Oh, it's not going to make any difference once the screen is on. Okay, question 2, there's a typo. It's supposed to say the order of tasks for selling services. What do we do when we sell services? So there are 2 steps. What is the correct sequence? So this is when you come to sit down and you're going to analyze transactions and you have to enter it into QuickBooks, this will put you in the right frame of mind. What am I doing when I'm recording a sale? What am I doing when I'm making a purchase? Okay, so we have about 4 minutes left to go. I see we have already almost the same amount of responders. So give a few more minutes to see if we could get some more people to, even anonymously, give their voting or the polling on the correct answer. And we'll, in a few moments, we'll be able to see the results. Okay, so I did notice that we have a couple doubles and the attendees, so I don't think we're going to get actual responses from every attendee. People logging on multiple device. Give another half a minute and see if we get two more respondees. I'll get us to 75% response rate. Okay, we're going to end the polling here. And we should review the results. Vendor reports can be accessed using Reports menu or Report Center, Vendor Center, or all the choices are correct. So you can view them in the Reports menu, the drop down, and the Report Center as well. Full reports. I believe also the Vendor Center, you could look one at a time. I don't think you get a full report from multiple vendors, but you could get a report of each vendor in the Vendor Center. So the answer of D would be the correct answer. The order of tasks for selling services. How do you sell the service? You create an invoice and you receive a payment. I'm glad to see that 96% of the people got that right. Creating a sales order and then receiving a bill was actually not selling. It's mixing together an order to sell something, but then in order to receive something. So the answer to, going down the list. So the first question, we got two Ds, one after another. The next question, third question, the order of tasks for purchasing services. So I just explained that you're going to enter a bill and you pay a bill. That will be one way to do it. Here's most people do here: create a purchase order, receive a bill, enter a bill, and pay a bill. It's a little trick question over here. Was definitely not entering an invoice and writing a check, or entering an invoice and receiving a payment. You're not purchasing. Well, the simple thing. Well, for now we'll let A and C go, but I have it down as A. You enter a bill and you pay a bill, a service bill. I guess create a purchase order. If you create a purchase order, probably there has to be a step before you get the bill because you made an order. Let's see what we have here. Let's open the QuickBooks a second. Okay, so the reason why purchase order is usually when you're buying an item, not service. Okay, you make a purchase order. So you're saying, I want different things. The price could fluctuate. And you want to see, you know, if the price in the catalog or whatever, a quoted price is negotiable, a call for price. So the purchase order will probably more be appropriate if you're buying items, whether it's for resale or even items to buy. But if it's service, why you make a purchase order? You just you get a bill and you pay a bill. It is what it is. But we could debate that another time. The purchase order windows is used to record which one of the following transactions: the customer order to purchase goods, cash purchases, services received but not yet paid, company's order to purchase goods for vendors. So the correct answer is when you want to order something from a vendor, you use your purchase order. If your customer is ordering from you to purchase goods, That would be called a sales order you're preparing. So the answer to 4 is indeed D. Okay. Payroll items for which adjusting entries may be necessary include all the following. I'm sorry, prepaid items. So we said we have, what wouldn't you adjust? Well, we showed how we adjust office supplies. We showed how we adjust prepaid rent and prepaid insurance. So unearned revenue is not adjusted because it is unearned. It stays as it is. That's the answer to 5 over here would be C. You don't adjust unearned revenue. Now again, you might have made an adjustment previously to recognize the unearned revenue as earned. But if you recall, what's the purpose of that will be a regular journal entry, not an adjusting entry. Adjusting entries are to change previous assets to make an expense out of it, or a previous expense to make an asset out of it. Unearned revenue is a liability, so we're not adjusting that. So that's, I believe most of the people got that right. Next question, which of the following activities is not connected with employee menu? So the answer is, you could write an employee a check, but that's not the way you just go write a check. You know, you pay the payroll liabilities, it's the taxes you owe, you make the payroll forms, which you didn't go through, but you will do that. Even entering the time will be through timesheets or activities. Is also in the employee menu in the drop down. But writing checks, you will not find that activity in the employee menu, and even if you give an employee a check, it's not in the menu. So the answer, that's A, is not in the menu. Okay. And most of you indeed got that correct. How do you add a new user and password to QuickBooks? So the answer is B. You go to company menu drop down, and you go to set up users and passwords. Set up users. How intuitive is that? There's add a users and password. We go to set up users and passwords. Beautiful. The answer is B. Okay. Complete the sequence of QuickBooks business activities. So you create an invoice, receive a payment. Okay, I see some people need answered purchase order. Again, we are invoicing a customer. So let's drill this in a little bit. Invoices are for customers. Bills are from vendors. So if you're creating an invoice, you're gonna hopefully you're gonna see the payment right away. Maybe you are creating the invoice to recognize the payment, though it's not so necessary to create an invoice just to get a payment. You could just recognize this. You could create a sales. We went through that. We do a sale, customers, sales receipt. He receives money on a sale. You don't have to do 2 items to make an invoice to receive a payment. The more you do, the more room for error. And conversely, what do you do when you are to complete the sequence of receiving a payment? What do you do after receiving a payment? Make a deposit. Very good. Receiving a payment, obviously you could pay your bills with that money, but you have to make a deposit with that money first. Okay, the answer mine is C. And finally, if you enter time, you pay employees. Okay, we didn't do this. I see there's a whole big machlekas here. The correct answer is pay payroll liabilities. Because you enter the time, that gives you what you have to pay employee for. Once you paid employee his check, the government wants their cut. And you pay the payroll liabilities, and when you make a check for that, then you can do the payroll forms. The answer 10 is C. And we're gonna stop share results, and we will do the last assessment. There are 5 questions here, 4 of which are debits and credits, and we'll give you 10 minutes for these 5 questions. If you need more time, so we should be able to wrap this up, including the review by 10 to 10. We'll take a couple questions for those who have, and we will go over to discuss the certification. So certification classes will generally be, right now, general instruction is usually about an hour, 45 minutes or so, and then questions and answers. Certification will probably be a little more interactive. If it's going to be a smaller class, we shall see. Wednesday will not be a class. We can either, or we could take a vote. We could just skip Wednesday and start the recertification next week. For those that are on a time schedule, I'm assuming also about 3 classes. That's my initial projection for recertification. We can do this week on a Tuesday if there's enough demand. People have set up their Mondays and Wednesdays. We could just leave this over for next Monday to start the certification. And basically, we could all finish this in the month of June, even if we start next week on the 2nd. So if you want to finish it, if we start on the 29th, then okay, let's see here. I'm going to stop talking, give you some quiet time to answer questions. Okay, so we'll give another 2 minutes for the testing. Okay, we're going to end the polling. Okay, so we have here an interesting debits and credits. You can see there are many more responses in different categories. So we'll go through them one by one. Okay, the cash inflows and outflows related to the company's, let's see, share the results. Let's see here. This is posted. Okay. Cash flows and outflows related to the company's primary business are categorized from the operating activities. That is the first part. It's your primary business gives you your net income, right? You take your P&L, that's your primary business. Then there are investing activities and financing activities. Those are different parts of the cash flows. But the sales activities is really not a line item on the cash flow. That is part of your operating activities. Depending on if they're expenses, they'll come out on your P&L. So we could summarize this as it's categorized, right? That's a question. How is it categorized? It's cash flows from operating activities. That's your primary business. So the answer is D. And let's go to record purchase of furniture. So I'll give you one klal, obviously. Anything that shows 2 debits or 2 credits, you could ignore because there's always 1 debit and 1 credit. Okay, so we're purchasing furniture. It's an asset. So that is a debit on the furniture. Cash loan, we borrowed as a credit, a liability. And of course, we got 79% debit, and that's just B. You debit the furniture, you credit the liability. Okay. Now it gets a little more tricky. Oh, not that it's planned that way. We're adjusting inventory to a lower amount. It means so we're missing inventory. Or if you look at a dollar amount, the value of the inventory is lower. So what do? So since inventory is an asset, and it says it's a lower amount, not a higher amount. So we're lowering the asset. So we're gonna, if the asset, let's say, is worth $100 and we're lowering it, we're gonna be removing $20, $30, $40 from it. So we'll be crediting the inventory. That already takes us to the bottom 2 choices. And since the credit is inventory, obviously it's the only one that debits an expense. What exactly the expense is, I'm not going to get into. You can put it as a miscellaneous loss because there's an expense here, or it's however you categorize it. But if the credit is to inventory, the debit is to something else. There's only an answer. The 3 will be C. The recording a new service sale on account. That means I sold something. An account means not that I owe someone money, as the answer B is. What am I doing? The customer will have a liability. Correct. He owes me money. But on my books, it's receivable. The answer is, one second, debit. No, not debit, sorry. That's just C. We're debiting accounts receivable because that's we provide a service, we want to collect on it, and we're crediting revenue. Yeah, I feel like don't see the word receivable right away and choose the first answer because we're not debiting the revenue. The revenue is a credit, it's going up. So the answer to 4 is C, and we got more than half the people got that one right. Finally, to record cash purchases. What is a purchase? Purchase is for inventory. Otherwise, you have expenses. So if you're using with cash, you're crediting the cash. So now we know that the cash is a credit. It's not a purchase expense. It's debiting the inventory. And answer to 5 is also C. So we got the last 3 C's. And one second here. Okay, so we're going to stop share results. That will be it for today. Good you able to join us, and anyone have Q&A? I'll be looking if there's any raised hands. I'll give a little bit of time for that. Look at the Let me look at the Q&A posted. Question for the service sales. Okay, so I see a comment over here that what's it called? There's a link. They get 2 hours to do 50 questions. So if you do the math, so it's also about a little over 2 minutes a question. So if you feel you're a bit rushed over here, you could see you'll get more time. Right, 120 minutes, 50 questions. You get over 2 minutes a question. Tonight you got about 1.5 minutes. But you know, if you practice on the 1.5 minutes, then you have chance to if you get a little brain freeze, you'll have a few extra minutes to play. If you're timing it in 2 minutes, then you run out of time. That wouldn't be good. But again, they'll pass you with not even a 90 or 80. I'm not sure what the exact score is. That you have to look into that link. Okay. And someone asked a question, what's the answer for number 30? I'm not sure where they're getting 23 from. Or for 30 and 23. So the answer to 30 is number C. We are processing payroll forms. I mean, paying payroll liabilities don't get processed the payroll forms. The answer to 30 is C. The answer to 23, we said today, we're going to go with the A, which is purchasing services. And we said usually the creating purchase order is going to be for buying an item, not a service. So at least for purposes of today, we're going to go and if you look in. I believe I think that's what you should go to if you see on tests. So if they want the link, they could scroll up and they could. There was an email that came from a wordy. Could we post that? You can look at the answer. The last answered question will have the link. Okay, I'm looking again. I don't see anyone raising hands. So I'll stick around for 2 or 3 minutes to see if anyone remembers something they forgot to ask. Last questions in the type of here.
Hi, thank you. I appreciate it. Didn't see it. Yeah. What's the answer for 26?
Ms. Goldman, you have a question?
Yeah, what's the answer for 26? Which of the following activities is not associated with the employee menu?
The answer is writing checks.
Okay, right? Okay. And 28?
What would you do after you create an invoice? So you're building the customer.
Receive payments.
Okay, so that's the answer.
10 to 28 should be A.
Okay,
Very good.
all right. I wasn't, you went, I was, whatever, I wasn't sure of the answer. I didn't see your answer. Okay, and 29 is C. And what's 30?
It's also C. I'll send out the answers. You'll have the answer to these questions.
Okay. Okay. We're gonna send them out. Answers, you mean for
Now that
homework,
we did in class, I'll send out the
answers for,
the
okay,
answers that you could have to get to look at.
Yeah. Okay, great.
No problem. All the best. Okay, about the Q and the
Okay, now this one's done. No. This is the last minute. I just logged them back in. Okay, we'll try again. Amuna or Esther, if you have a question, I unmuted you on your ends.
Hello? Hello?
Yeah.
Yeah. So I just wanted to know if you could explain, like, in another way, the debits and credits, how, like, it works with the company, like how it, like, which, like, when the company gets, like, more money or less, like, I'm not, like, understanding it.
Give me an example of any transaction.
I should give you an example.
Yeah.
I'm buying furniture, whatever, a copier.
You're buying a copier, yeah.
Okay, so what's like
How you funding it? You have cash,
um,
borrowing money, you're investing your own money.
a credit card?
Okay, so what do you have to do when you put something on a credit card? Is it money that you have in the bank? You own it?
Yeah, I have the money.
No, you're using a credit card. You're not using your debit card. You're not spending your money, using a credit card. By definition, you're borrowing the money, right?
Okay.
So I'm just giving you prompts to see, that you should be able to get to it yourself. I could give you the answer, then, I want to see if you're going to follow the train of thought. So you're buying a copier. So what's the copier going to be doing in your company? Is it disappearing after one day?
No, you're keeping it. So
how would you categorize the copier?
but then it's as a credit right now because it's on your credit
How are
card.
you categorizing the copier itself?
Credit.
What is a copier? The copier itself, is it an asset? Is the copier, do you owe the copier?
Yes, it's good. It's gonna be, if I bought on the credit card, it's gonna become an asset once I pay the credit card bill.
No. It's an asset today. The copier itself, a company owns. You have to pay the credit card for the copier.
Okay.
So the assets always go up, increase on the debit side. So the asset, you debit the copier. If you take money out of the bank, so you're crediting the cash. Since it's a credit card, it remains a liability. You owe it.
Okay, I guess it's something that I'll just get more with experience.
Try a second example.
I don't know. I have cash and I'm I guess let's say filling up gas.
So you're paying at the pump, you're paying cash, right?
Yeah.
Okay, so what do you, again, you have to think everything, there are two parts to it. Why are you buying, what is the gas to you? Is it an asset?
I guess so, but well, no. I mean, it's an asset that gets used up really quick, so it's like
If you bought 10 containers of gas and you put it in your garage, you might say you have an asset of gas. When you put it in your car and it's burning as you go,
it's not an asset.
It's an expense. It's like you have gas in your house to heat gas. You have gas to run your car.
Okay, so that would be.
How do you do expenses? What's an expense? It's a debit or credit.
Expense is a credit.
So again, we said
yes or no, and it's wrong.
Income
right?
and revenue affect your equity, right? So you are worth more. Your company is worth more when you do sales, right?
Mm-hmm.
Your company is worth less when you have expenses because you end up with less money. So if your equity goes up with your revenue, your equity is going down with your expenses, right?
Right.
So
then it would be a debit.
It's bring you down. Your equity goes up with your revenue. That's your credit. So when you buy gas, you have all expenses go down with a debit. When we say go down, it means it brings the company down, it increases. So any expense is a debit. Now, the cash that you had previously, right, your assets are debits. When you take away your assets, those are credits. So you're crediting your cash for the amount of the gas purchase. So again, so practically a lot of your transactions, you're not going to enter as a debit and credit. You're going to go you're going to go as if you wrote a check. I said QuickBooks, all expenses, you enter as if it's a check. So you can write a check for gas, $20. Behind the scenes, that's a debit and credit. You debit the expense and you credit the cash. A lot of your transactions will be, you're not going to enter as debit and credit. What I explained is that you have to understand debits and credits because when you will manually enter many transactions that are not hitting your bank directly, you have to know you're putting the right thing on the right debit and the right credit instead of undoing. You can spend a lot of time keeping good books. When you start making your entries, you're messing things up. So you have to know that.
Yeah.
And I actually pointed out that there are two types of journal entries. There's the one in the company side where you'll be doing it all the time, or whenever you'll be doing it, and there's one under an accountant. And the accountant, under complex entries, he could send you just an entry to add to your file. That's why you see by underneath the accountant software, you have send general journal entries that were made by the accountant, and you import it with the utilities tool.
Right.
I hope that.
All right. Thank you.
So you have to keep on generating yourself examples and thinking through what's happening. Is it an expense? Is it an asset? And that's what those are the two general rules, that whatever's happening on the asset side is the opposite effect on the liability and equity side. The equity itself is affected by the P&L. And now you see why the P&L, when you look at a P&L report, that net income item is transferred over to your balance sheet. That's your equity. You made money, your equity goes up. You lost money, your equity goes down.
Mhm. I know one goes back. I know it has to balance out, but I feel like I'm having a hard time understanding which one it goes to what.
So you'll still have to, if you I don't know if you're going for the certification, or there'll be a couple more classes. We could do some more review.
Okay. All right. Thanks.
Okay, no problem.
All right.
One second. I think one second. Okay, so I said that you have to register with FIRMA for the test. So I moved over from the Q&A. If anyone has questions, this is the audio-enabled time. We'll save yourself time from composing an email that might go unanswered until the next class. Hello? Try again. Okay, so since there's no open questions in the Q&A and no one's asking any questions on the raising their hand, so I'm gonna wish you a good evening, and most likely we'll start the recertification course the upcoming Monday. Slach Rabba.